If you are marking up structure, how you see on screen now, just marking up any little break that you see, then you will never be able to understand what the market's actually telling you and to take the correct trade. Most of you probably already know what market structure is, but we're going to start with the absolute basics to begin with this video. So the market structure refers to the organisation and behaviour of the market, including the distribution of bid and ask prices. Every high and low in the market makes up the market structure. There is bullish and bearish market structure, just like there is with order flow. So order flow is the overall move of the market, structure is what makes the order flow, as we explain here. So order flow equals the flow of buy and sell orders, representing the strength in the supply or demand of currency pairs. And structure refers to the distribution of bid and ask prices and makes up the entire order flow. All the highs and lows makes up structure. So here's just some key abbreviations to know. HHHL, LLLH, probably see people use these. Use them myself sometimes. So HH is higher high, HL is higher low, this is lower low and lower high. So if we get a HH and HL, that's a higher high and higher low, then we've got bullish structure. If we get LH and LL, which is lower high and lower low, then we've got bearish structure. So on the left here, this first image, we can see bullish structure. We put in a low, we put in this high, then we put in another low which is higher than this one, so that's a higher low. Then we put in another high which is higher than the previous high, so that's a higher high. And then we continue with higher lows, higher highs, higher low and higher high. So that's bullish structure. That's a very basic structure, okay? That's the cleanest you can see it. It's not always going to look like this, of course, in the charts, but this is just so you can get an actual understanding of what structure is and what bullish structure will look like and how to read it. So you'll have the first low here, then a high, higher low, higher high, because that's low is higher than that low and that high is higher than that high, and then it will continue on an uptrend until it decides to go into a downtrend, as so here on the right, where we have a high here, then a low, then a lower high, a lower low, a lower high, lower low, lower high and lower low. It's a lower low because this low is lower than the previous low, and this is a lower high because it's lower than the previous high here. Very simple stuff, guys, so hope you understand that. And then we have a BOS, which means a break of structure. Break of structures tell you where the market currently is and where it is potentially going. So in the first image here, we have bullish market again, an uptrend, just the exact same screenshot as before, but we've added break of structures on. So when we're putting in a higher high, for example, this high is higher than this high here. When we're doing that, we are breaking this high. So we break through that high, and that's a break of structure. And then again, we break through that high, putting in a higher high, and again, that's a break of structure. And then finally, we have another one there. And on a downtrend, it's the exact same but reversed. So we put in this high, we put in this low, we put in this high, then we put in a lower low. Once that lower low gets put in, it's broken the previous low, so that's a break of structure. And next we have strong and weak highs and lows. On an uptrend here, a strong or weak high and low would be strong lows and weak highs, okay? So what we mean by this is when we're in an uptrend, we're putting in higher highs and higher lows. These lows are typically protected. It's what you'd call protected. So what I mean by that is because we're putting in a higher highs and we're on an uptrend, the highs are getting broken through, right? Whereas the lows should not get broken through because we're on an uptrend. We should typically just see a continuation of higher highs and higher lows, meaning these lows are strong and they are protected, okay? Whereas the highs are weak. So here, what are we expecting when price gets to here? We're expecting price to pull back and not take out this low because it's a strong low and it's protected. Instead, we're expecting it to pull back slightly wherever it wants to pull back to, not take out the low, but then continue the uptrend and take out the weak high. Whereas here on a downtrend, we are expecting the opposite. So we're putting in lower lows, we're having breaks of structure to the downside, putting in lower highs, putting in lower lows. When we're doing this, what have we got? We've got strong highs and we've got weak lows. So when we put in this final low here, we're expecting price to pull back, not take out this high because it's a strong high and it's protected. We're expecting it to pull back somewhere in here and then go down and break this low, continuing the trend because this is a weak low. Next we have internal and external structure. This may look a bit confusing if you've never saw this before, but basically, say we have this high up here, we have this low here. That is the external structure. So all these actual points, the actual swing, it's called swing structure, okay? These are actually the swing points. So price swings from here down to here, up to here, down to here. And that is the overall external structure. Whereas internally we have this structure here, what you're seeing. So I'll show you what it looks like in the charts in a moment. But here we have a high, then a low, then a high, then a low. So this is a lower high, lower low, lower high, lower low, lower high, lower low. So we're bearish, but it's not going to look as clean as what you were seeing before. If I go back, it's not going to look just as clean as this, right? We're not just going to get like one movement, a couple of candles going up, some candles going down. It's not going to be like that. You're going to have candles in between that are showing different strengths on the upside, strengths on the downside, and so on. And that's what this represents here. So we're going to have different little movements inside the overall flow of the orders. Okay, so we're in the charts, and what it looks like actually here, live in the market, is it might look a bit messy because I've got my markings all over the place from where I've actually been trading and stuff. And what this is, you'll see the purple dots and these breakthrough structures and change of character. You'll learn about this in a moment. So a breakthrough structure, obviously, it happens here, and then we don't get another breakthrough structure in here. Okay, we don't get another one. People might think this is a breakthrough structure, but according to my rules, that is not a breakthrough structure. So we have this final breakthrough structure here, and then we put in this high, and we start to pull back. So this is our low, and this is our high. So we need this broken, or we need this broken for our breaker structures. But inside here, you're not really seeing much. I mean, you're not really seeing nothing get broken externally, but you're seeing it internally, okay? So this here is a breaker structure internally, breaker structure internally, breaker structure internally, breaker structure internally, and so on. All these little points here, that all breaks the structure internally. So if I map this out in a different colour, let's see. I'll just put that there. Let's just map it out in red. So if I map these points out in red, we'll see a whole different story. We have this high, this low, this high, this low, this high, this low, this high, this low, this high here, and we'll just say this low, this high, this low, this high, this low, high, low, high, low. Okay, you get the point. So there's a lot of noise, and people will get confused with this noise. They'll be looking at this live in the charts when they're looking for trades, and they won't understand where the market's going. As it's coming down here, they might think they're bearish and they're looking for sells. Then they'll get wrecked and they'll get taken out, and then they'll start looking for buys because they're seeing it's going bullish. Then they'll start looking for sells, then buys, then sells, and so on. They'll just get so confused because they're not understanding that the external structure is bullish. So what's happening internally is just insignificant. It doesn't matter. So they shouldn't be paying attention to that and looking for trades inside here. What they should be doing is waiting to align themselves with the overall flow of the external market, which is where the real trades happen. You can trade internal structure, but for beginner traders, I recommend staying away from internal structure, just paying attention to the external trend of the market. Okay, this is for more advanced trading. Once you get comfortable with external, you can try and trade internal structure, okay? The external structure here would be this, and then once this low gets broken in here, it shifts bearish, which is a change of character, which we're going to move on to now. Okay, so then we have our change of character, like you just saw in the market then. It's just when it shifts to the opposite side. Change of character, a church means a change of character, and it's identified by a break of internal structure or external structure as well, in the opposite direction of the most previous break structure. Ignore the internal parts, it doesn't only mean internal, it is external as well. So here we can see a break to the downside, we put in this high, we put in this lower low, we have a break, then we put in a higher high, shifting the trend from bearish to bullish. That's a change of character, it's a change of the market direction. I'll show you some examples on the market again in a moment, we'll go back to that same thing. So here, what we can see is, this is an example of it internally. It can also happen externally. So the red markings here are external structure, and inside we have the internal structure, what I just shown you then. Externally, we have these red ones, and if it decide to shift now and take out this external high, that would be an external change of character, of course. I have a major bust, that's just external structure, just so you don't get confused. So we have break structure down on both of these here, and then internal structure shifts. And what happens when internal structure shifts, that means the external is just pulling back. So if you see an external change of character like this, shifting from bearish to bullish, then you can, but the external structure is bearish, then you can pretty much guarantee that structure is coming back to put in an external lower high, because this high is protected and this low is weak, okay? This high is strong and this low is weak. So you're pretty much expecting it to come back, internal to shift bullish, but the external stays bearish, just puts in a lower high. If it was to come up here though and break this high, or if it was to break this high, then the external shifted bullish. Here we have a little representation of what it looks like in the charts. We have a break structure up, then we have a change of character down. This is internally. The blues are internal and the red is external flow. This is a major break structure, so this is an external breakdown. Then we have another external break structure to the downside. Then we have an external break structure to the upside, so that's an external change of character. On the inside, on the internal, we have a break up to the upside, a breakdown, which is a change of character because it's straight after the break up. Then we have a break structure down, breakdown, a break up, so that's change of character to the upside. So now we know external is coming to put in a lower high and not take up this high, put in a lower high and then come down to take up the low, which is exactly what happens. And then when it's coming back down to take up the low, we have another internal change of character, this time to the downside. And then we take up this low here, continuing bearish, but then we actually come all the way up and take up the external high, which means we have an external change of character, and then the overall trend of the market is actually changed. And new to the markets, if you're a beginner, I recommend only trying to trade external structure. So once it's pulling back in here, you'll look for a trade in here, maybe from this order block or from a fair value gap or something like that, and then look to take out the external low. If you're trading internally, once you get better, you can actually do that, but on the internal. So I teach you how to do all this inside my free course and inside the mentorship and community. So if we go back to this example here, we can just clearly see the purple's the external, the red's the internal. So when we have this change of character here, we just expect it to go and take out this high and continue the external trend. But that doesn't happen. It has another internal change of character to the downside, and then it comes down and actually takes out the external low, giving us a change of character. So that's where it can get a bit confusing if you're only paying attention to the internal structure. But if you're paying attention to the external, then you'd know once that happens, you can then look for a sell instead of a buy. Because once we're bearish, we're going to be looking for sells. When we're bullish, we're going to be looking for buys. We're in the charts and we're just going to break down some trade that happens here. So starting off, we're going to mark out the structure, okay? So according to my rules, and if you want to learn my rules, I will go over them at a future point, but you will learn that within the community. So within the free course, there's a lot of information in there, loads of different concepts that are all over YouTube, and you can find them for free, which is why the course is free, but it will take you a lot of time putting them together and actually structuring the concepts, okay? So people usually do this and then they'll sell the course for hundreds of dollars, maybe even $1,000 or upwards of that. But I've done all that and I've put them out there, the entire course, for completely free. And it includes quizzes and stuff like that as well, so you're actually learning things and retaining it within your mind. And yeah, then I have my paid community with extra courses inside of and ebooks and a lot of more stuff coming on the way. And you'll also get access to the Discord where I break down the market every week and every day, send out trades I'm in, send out trades I'm looking at, and what I'm just expecting and reading from the overall market. So if you want that access to me and to my thoughts on the market from a day-to-day basis, then you'll get that as well, just from paying to join the community. It's only £33 a month, so it is very, very cheap, and you get a lot of value with it. So the link to that will all be in the description. But without further ado, we'll go on with this trade here. So we'll start off with just breaking down the structure. So we don't really need to get into all of the structure back here and what's going on over here. But if we just want to break that down quickly, we can just start with just say here and just say we've had this break structure down, and then we got another break structure down here. These all fit my criteria of the rules I have with actual pullbacks and actual breaks of structure. I don't want to confuse all right now with all of that, but like I said, all that's within the community anyway. Then we have a break structure here to the downside and a break structure here to the downside, okay? So when that's happening, you can look for a trade in here and trade down to this low here. Then we break that high there, being a break to the upside, so that's a change of character, so now we're bullish. Then we break here, being a break structure to the upside, we're still bullish. Okay, and then finally we break this, being a break structure to the upside again, so we were still bullish there. And then we broke this low. Okay, we didn't go up, we was ranging from this low to this high. Nothing really happened internally in here, there was no internal structure. We had a bit of internal structure here on this ride down, and then we broke this external low. Okay, that's being a change of character externally. So now what is our external structure? If we just get this tool and we just go from this high here, that is the overall high that we're at. So I'm a bit off there, but you get the point. That's the overall high where we're at. And then our overall low will be this low right in here. So all of this inside here, all the structure here is all just internally. It's just internal structure. So you can trade this internal structure. However, it can get a bit confusing if you don't really understand external structure and the difference between external and internal structure. So that's what I've tried to do throughout this video, is explain the differences. Hopefully you understand that now. But if you're a beginner trader, I recommend only trading external structure. So now that we're bearish because we broke this low, you're just going to be looking for sells. So when price comes up here, you can look for sells. When it comes up here, you can look for sells. But what you actually want to do is you want to wait for price to come into 50% of the leg. Okay, so that's this here. If you don't know what we're doing here, this is a Fibonacci tool, and I'll explain this in another video. I'll upload one in a few days, another video on this, so you'll understand this, and then we'll pair them all together once I've explained every little concept here on YouTube. All this is inside the free course as well, so if you want to go ahead and understand that now, you can. Just quickly skip ahead and go into the free course, and all these are broken down into lessons on themselves, and then paired together at the end, with different strategies as well. So you'd wait for it to come up into the 50%, so above 50% is premium, below is discount. So when you're selling, you want to sell from premium, you want to buy from discount. So we're looking to sell because we're bearish, because we broke this low down here. So we're looking to sell in premium pricing. So when it comes up into here, you'll look for a sell. Comes up into here, you'll look for a sell. Okay, so we're getting back up into this range now again. We'll just like to enter it, and we're going to look for a sell. So we've took some buy side liquidity, and then we're going to look to sell to target this sell side liquidity and target this low down here. So we're going to jump down to the 1 minute time frame. Okay, and we're just going to follow structure on the 1 minute like we would on the higher time frame. So we can click this button and skip ahead. Right now we're bullish, and we're still bullish. We're still bullish because this was just an internal break. Okay, so internally, obviously externally we're ranging from here. This was our break structure, so this would have been the low to break externally on the 1 minute for a change character to the downside, for it to go bearish. Here it's just internal, and now we've got an internal change character, so we're going back up. Okay, now we've had an external break structure. Now we'd need this low broker. And then we get another external break structure here. So now when this high gets broken, so now we need this low broken for our change character. Externally, internally we've had breaks of structures and changes of characters, but we're not paying attention to that. See if we're going to get a break of this now. I think we do. Not quite, because it's not a body close. A break structure has to be a body close. Okay, so when we're seeing stuff like where is it? We'll just use this now. So you can see when this gets broken here, we can see that the actual body of the candle closed above the high, so that is a valid breaker structure. Okay, if it was just a wick, then it doesn't count. Alright, so like this for example, now this is our overall high and this is our low that we need broken for a change of character, but price doesn't close below it. So if we look at this line, if we zoom in closer, we can see that price does not close below. It pushes down with a wick and then it comes up and the candle closes here. If a candle closed below, then that would be a break structure. So right now it's just a liquidity run. So we're waiting for the candle to close below that line. Okay. As soon as that happens, we can look for a sell. So we still haven't got that. This is all just internal structure. And then we still haven't got it now. We've just wicked it again. And then finally, we close below it. So when that happens there, we can now look for a sell. So to keep it simple for you guys, I will just simply sell straight from this candle now. And I'll just cover the high with my stop loss, like so. Just right on the top, okay? And then we'll just target the actual 15-minute structure, because now the 1 minute structure is aligned externally. We're externally bearish now because we closed below this external low, and now that is aligned with the external structure of the 15-minute time frame, which means now we can actually sell from the 1 minute time frame and target a low on the 15-minute time frame, okay, which would be this low right down here, okay, because externally we're ranging from this high to this low. We've come up into the 50% into the premium pricing, we've took buy side liquidity, and now on the 1 minute time frame we have aligned externally with the external structure of the 15-minute time frame. So that's perfect now for us to take a sell and target this 15-minute weak low. Remember, this is a weak low and this is a strong high, so we're expecting this to get taken out because we are now bearish after shifting from breaking this low in here, giving us a change character. So we're going to target this low, we're going to place that trade, just click place order. This is on FX replay, and you can click save or save in journal if you want, or we're just going to save in this case here, and then we'll just watch price play out. Just click the skip button, and we can see it hits take profit, and that's a lovely 3.4 risk to reward ratio on a short position on Euro USD. So that is how you use structure properly and read it properly, and actually pair the external with the internal on a higher time frame and a lower time frame to get in and out of trades. And yeah, try to not pay attention to the internal structure if you're a beginner. If you're advanced, you can trade that, and I do show that how to trade that as well in the course, so you can go ahead and look at that. But if you're a beginner, I recommend just trading external structure. Even a lot of advanced traders only trade external structure because it's just so much simple, and you don't want to get caught within the noise in here, because you could get a long in here and you're getting taken out. Then the internal shift's bearish and you're looking for a sell in here, and then you get taken out here. And then when this internal high gets broken, you're thinking it's gone back bullish, but it hasn't. Overall, it is still bearish because of the overall external structure. Okay, so when you click the link in the description, it will take you to this. This is a complete course on trading. You will only have to, it's completely free, so you'll only have to sign up with your email, and then you can log in and go through this course. It's got 44 lessons, 7 hours of video content, so for free, it's completely worth it. It's a full section on beginner, so if you're brand new, you can learn everything about this stuff. And then it has SMC course, which is smart money concepts, which is what we go through in trade, order flow structure, change character, order blocks, supply and demand, fair value gap, mitigation, liquidity, premium discount, engulfment and impulse. It has quizzes like I explained before, price cycle, entry styles, top-down analysis, lot size calculator, and then it has some trading strategies as well. Swing trading strategy, counter trend, 15-minute liquidity manipulation, session range, and day trading strategies. Then it has one video on trading psychology, which is very important. The rest of them are in the paid community. There's a lot in there, and this is where you will really take your trading to the next level once you understand psychology and how your mind and everything actually works when trading. And then if you want, you can join the community. Okay, and then finally we have the paid community. So if you go through the course, or even if you don't want to go through that free course because you already know all these concepts and you just want access to chat with me and get an insight to the markets on a day-to-day basis and extra things, then this is what you get in this community. So it's £33 for a month, each month, and that's, extremely cheap for what's here. You have my own ebooks plus PDFs, and this is all trading, okay, and other books that I've made on spirituality and stuff like that, and mindset and all that kind of stuff. Then you have Mastering Your Reality, so this is a central training program, so it teaches you everything about the mind and reality, how it all works, how to use stuff like spiritual concepts in trading, to master your trading and take it to the next edge and trade from that 5D, which is what this whole brand's about, okay, which is the fifth dimension, trading outside the box, because a box is a 3D shape, right? So when people say think outside the box, that is what it truly means. And then we have that beginner course, just in case people buy this straight away and don't go through the beginner course, so that's here, that free course. Then we have Joe Dispenza's The Formula, which is more things on the mind and how it works. And then we have a library of thousands of books that are completely free just for being in here, just for being a member of this, but they're actually worth thousands and thousands of dollars. There's all sorts of trading books, psychology books, self-help books, spirituality books, esoteric books, and a lot of other stuff like that. There's thousands in there by all the top authors, and yeah, it's definitely worth money. And there's a lot more coming to this as well. So much more coming to this. I've got more courses on the way, more trading courses, more mindset courses, one-to-one mentorship coming. Obviously, you get access to the Discord as well in here, which is great. And then inside the Discord, there's a lot of stuff in there as well. And you get access to me. I'd break down the markets on a day-to-day basis, share trades, so you can follow my trades if you want to, and all sorts of stuff like that. Okay, so yeah, hope you guys enjoyed the video. I will see you guys in the next.